Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into the latest earnings report from U-Haul Holding Company. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. U-Haul, a leader in the self-moving and storage industry, has just released its second quarter fiscal 2025 results. There's a lot to unpack, from revenue shifts to strategic initiatives.
Revenue and profitability overview. Let's start with the financials. U-Haul reported net earnings of $186.8 million for the quarter, a significant drop from $273.5 million last year. John, what are the key factors behind this decline?
The decrease in net earnings is primarily due to increased depreciation expenses and reduced gains from the disposal of retired rental equipment. Despite these challenges, U-Haul's total revenue slightly increased to $1.66 billion, up from $1.65 billion last year, indicating stable demand in their core business areas.
And how did this impact their earnings per share?
Earnings per share for non-voting shares fell to 96 from $1.40, reflecting the overall decline in profitability. This is a crucial metric for investors to consider, as it directly affects shareholder value.
Operational efficiencies and future outlook. Despite the earnings decline, U-Haul has shown growth in specific segments. Can you elaborate on their operational efficiencies and future outlook?
Absolutely. U-Haul's self-storage revenues increased by 7.5%, driven by higher occupancy in new locations. Self-moving equipment rental revenues also saw a 1.7% rise. These improvements highlight U-Haul's strategic focus on expanding its storage footprint and optimizing rental operations. Additionally, with $1.77 billion in cash and credit availability, U-Haul is well-positioned to invest in future growth opportunities.
What does the leadership say about these results?
Chairman Joe Shoon emphasized their commitment to enhancing customer service and expanding their U-Box and U-Store offerings. While acknowledging the conservative customer sentiment, he remains optimistic about U-Haul's ability to adapt and grow.
Financial health and strategic initiatives. Let's talk about U-Haul's financial health. How is the company managing its debt, and what strategic initiatives are they pursuing?
U-Haul's total debt stands at $6.79 billion, with a net debt-to-EBITDA ratio of 3.5, indicating a manageable debt level relative to earnings. The company declared a dividend of 0.05 cents per share, reflecting its commitment to returning value to shareholders. Strategically, U-Haul is focusing on expanding its self-storage and U-Box offerings, which are key growth drivers.
How does this position them in the market?
U-Haul's strategic initiatives, coupled with its robust financial position, enable it to maintain a competitive edge in the self-moving and storage industry. Their focus on operational efficiencies and customer service is likely to support long-term growth.
Key takeaways. In summary, U-Haul's second quarter fiscal 2025 results show a mixed performance with a decline in net earnings but growth in key revenue segments. Their strategic focus on expanding self-storage and U-Box offerings positions them well for future growth. John, any final thoughts?
U-Haul's ability to adapt to market conditions and invest in growth areas is commendable. While there are challenges, their strategic initiatives and financial health provide a solid foundation for future success.
And thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on U-Haul's performance in the comments below.